Good afternoon, ladies and gentlemen, and thank you very much for joining us for what promises to be a provocative session here at the Rising India Summit. As Zaka pointed out, what we're going to be testing today is the hypothesis whether India is really rising and what it will take for us to really come closer to that aspiration of becoming a middle-income economy and how soon we are going to be able to get here. My guest today needs no introduction. Zaka's already told you a lot about what he does and how he does it. But Ruchir, let me start by asking you, over the course of the past 24 hours, we've heard a lot of what is working for India. We're growing at about 7%, a little over 7% today. That's the kind of growth rate that we've seen over the past decade. Macros perhaps looking a little less favorable than they were over the last 3 years. On the basis of the parameters that you track, and you have 10 ways of identifying whether a nation is rising or falling, in 2018, how does India look to you?
Right. My consistent narrative about India, and this is something that we've spoken about in the past, is that ever since I've sort of been tracking this for the last 25 years closely, is that this is a country that consistently disappoints the optimists and the pessimists. So if you get too lost with one narrative, you're likely to fail in India. I think that what we have seen basically is the fact that a couple of years ago, there was a lot of optimism, almost as if like it was only a matter of time before we would get to 8 to 10% economic growth. And that really hasn't happened. Now, I think we are sort of entering a very critical period where I think that the global economy is doing well.
Yes.
But as far as India is concerned, it's not been able to fully participate in this massive global economic revival that we have seen over the past 18 months or so.
What's gone wrong?
Well, I think there are 2 or 3 factors. There are the obvious ones which we have spoken about demonetization and the teething problems with GST. But I think that the one sort of really big problem which hasn't been fixed in India, and if you look at it, that if you look at all the major economies in the world, when they went through some sort of a banking crisis, until the banking system was fixed, it was very difficult for those countries to get back to their full potential. This goes back to Italy, to the United States. So the banking system, the financial system is really the artery. It lies at the heart of what a nation can do, and in terms of what its growth rate is. And that, for me, has been the single biggest shortcoming of the last few years.
It's been the biggest missed opportunity. You believe that the government should have exercised the political majority it enjoys to be able to drive through banking reforms, which in your mind means privatization.
Yeah, because, I think there's been a lot of debate about privatization and whether that's the thing to do or not to do, and all sorts of ideological debates have come about. For me, it's a very simple number which tells you about really what's going on out here, which is that in India, like as you know now, about 2/3 of the assets are with the public sector banks. This is the highest of any democratic country in the world. The average across emerging markets is about 1/3 in terms of what it is. So every country needs a public sector to meet some social objectives. But there is no country like India where the figure is this lopsided. So I think that, for me, that's the issue. It's not about public versus private. It's about a balance. That in the banking system, the average number in which the share is there across the world is about 1/3, and India's at 2/3. And there's a side effect to this, which is that if you look at all the incremental economic the financial activity, it's all happening through the private sector banking in terms of whether it's got to do with trade finance, credit cards, the massive retail lending that we are seeing. A bulk of it is happening through the private sector banks anyway. So what India is seeing is really privatization by malign neglect. That it's not happening explicitly, but the banking system is being privatized, but it's happening at a huge cost, whereas the public sector banks are not only being destroyed in value, but it's also choking the economic recovery. And for me, the single biggest fear just now in India, if you ask me what is the biggest risk to India in 2018, I think the single biggest risk to India, if you ask me currently, is the fact that we have a regulatory overkill. That we have seen we have seen this.
Are we likely to see a regulatory overkill, or we are already seeing a regulatory overkill?
I think we're already seeing parts of it.
Okay.
And this is, already manifesting itself in many ways. Now, I do believe that many public sector banks are going to be completely frozen to lend, given the sort of regulatory overkill that we are seeing currently, which is that...
So you believe that there is going to be a credit freeze?
Not a credit freeze because the private sector banks have taken such an increased share, and I think that they will keep lending. But there are many sort of side effects of this. The first side effect is that the access to credit is going to get more and more directed towards the big companies with established credits, right? So a problem in India in the last few years, and this is a global problem, but it's been sort of accentuated in India, is that the big have gotten bigger. So if you look at companies in each sector, the top companies have just kept gaining market share at the cost of the smaller companies. And when you have this type of a credit environment, it's the small and medium-sized businesses which get hurt the most when you have, like the sort of risk aversion which sets through. And a lot of the private sector banks will be able to lend, but a lot of the public sector banks are going to be really frozen. And even the private sector banks are going to be much more cautious about who we are lending to, what the credits are, because the cost now of making a bad loan has gone up a lot. It's almost become like a criminal offense. And I think that this is what India has to be careful about, which is that we have to avoid this temptation for regulatory overkill. And this has already been playing itself out in many ways.
Okay.
One is the banking sector. The other statistic which I find, which is what we just came up with, which I find quite staggering, is that since 2014, 23,000 millionaires have left this country.
23,000 millionaires have left India since 2014?
Yes.
Okay.
And in terms of, like you notice, in terms of what's going on here, and to put this in a global perspective, last year, 7,000 millionaires left this country, the largest number in recent times. The year before that, it was 4,000. So the number is going up of the number of millionaires leaving this country. In absolute terms, this is still behind China, but as a share of total millionaires leaving this country, this is the largest of any major nation in the world. So that so we're seeing
How
this.
do you explain that?
Well, of course, some will say this is a good thing, that this is an anti-corruption drive and we're driving all the corrupt away. But I think that there's a major side effect of this, which is that at the end of the day, you need your own domestic people to invest in your country. I think that is very important. Foreign investment is important, but it's really domestic sort of participation, domestic investors who sort of make a nation going forward. So I think that, to me, this has to be really sort of looked into, that why are so many millionaires leaving this country? And if you're happy about it because you think this is part of the anti-corruption drive, fair enough. But when the number is the highest in the world, at least as a share of total millionaires leaving the country, that should be a cause for concern.
Well, that's a significant headline that you've given us, Ruchir, that India has the highest number of millionaires leaving the country. And since you talked about domestic investment, yesterday we had a session here with business leaders, and Deep Kalra, who in a sense is part of the startup ecosystem and of course has now been around for more than a decade. His point was that India has taken Atithi Devo Bhava to a whole entire level, where you're welcoming foreign direct investment, you're welcoming foreign companies, but at the cost of domestic entrepreneurs, domestic entrepreneurship, and not providing a level playing field. Does this number that you just gave us, in your mind, also perhaps have something to do with the point that Deep made?
Yeah, I think so. I think that that's absolutely true because, like you go to Dubai today and you're likely to meet more Indians out there than you're likely to meet in a restaurant in Bombay or Delhi or something like that. So you can see as to where the capital is fleeing, what the magnets for capital are, Dubai, Singapore, of course, back in the US and UK. So that, I think, is definitely the point. But as I say about India, that what's fascinating for me, I wear many hats. One of them is that of a foreign investor as well.
Yes.
What's fascinating about this country is that how this country keeps on rising. So in fact, I know that your thing is India rising. My thing is that this country is forever rising, whatever you want to sort of make out of it, right? So that it's on a continuous sort of upward march, but it's a sort of chaotic march, and for every sort of positive story, there's a negative story. So what's happening in India, as you said, many domestic sort of people are leaving, and also the fact that the big are getting bigger. But this also remains a dream for investors like us. And why do I say that? The highest number of quality companies in the world, in any developing country, but I'd say in the world, at least as a share, we find in India. Over the last 5 years, there have been about 70 companies in India with a sort of market cap of at least $1 billion, which have doubled in value. you don't get that kind of sort of richness in other sort of emerging markets. In places like Brazil, we can find 10, 20. Russia, we can barely find half a dozen. So on one side, you have this crony capitalism, which sort of is out in all its ugly display. On the other side, you have these incredibly good Indian companies that have given a lot of value back to investors, and they're very high quality in terms of, if you look at the metrics like return on equity, consistent earnings growth, India ranks right up there compared to any nation in the world if you take it as a share of the total companies listed out here, which is quite large. So it's a country that we always want to be engaged with.
Sure.
But obviously we keep looking at the fact that what more could be done for India to have, become like the next China. That's really been the sort of dream of so many of us who have sort of been studying development economics and who've been in awe of China's rise since the 1990s. And there I find that no matter what happens, no matter what the politics is, we consistently sort of disappoint in terms of being the next China. As an economic story.
Paul Krugman was talking about how there has been a greater degree of convergence between India and the path that advanced economies are taking in the last 30 odd years. But I'll come to China in just a second. I want to continue to talk about where you see the markets in India, Ruchir. And you talked about how you continue to be confident in investing in specific Indian companies that meet all the parameters and the matrix that you've laid out for us. Is it harder to find value in India today, given where prices are, given where valuations are?
The biggest cliche in the world I find is that the easy money has already been made, right? Because you look back at the past and you find that it's been done. So I don't think that, there's always going to be opportunity out here. Yes, the fact is that a lot of optimism had crept in, and some of that optimism is getting deflated very quickly. But I don't think that this is ever going to be a market which is going to sort of just tank and be like Turkey and stuff. I see enough opportunities. I don't think that that we are sort of sufficiently engaged. We see enough opportunity. There are enough high quality companies available out here. And the good thing, as I said about this market, I know there's so much focus on this conference about politics. That how much politics matters, elections are coming up, what's going to happen as far as elections are concerned.
You think it doesn't matter at all?
Exactly.
Or it's limited?
No, I think that the importance of politics in the Indian context is way exaggerated. So I love following politics. I travel every time there's a major election in India. I spend a week traveling with a band of people to figure out what really is happening in that election. It's fascinating. But one thing I've learned over the years is that do not draw any inference from the election results on what's going to happen to the economy or to the markets. And the markets is very interesting. We think of markets as this sort of very efficient beast. The markets have always been, the Indian market has always been wrong, at least initially, about the politics. And what do I mean by that? If you look at it, in 2004, when the UPA first came to power, the market was limit down for a couple of days. It was basically shut, right? Because there was such pessimism about what would happen under their regime. Instead, you ended up getting one of the biggest bull markets because we had this massive global boom which was going on. 2009, the opposite happened. The UPA gets re-elected, and on the back of that, now all of a sudden, all those same analysts who were skeptical about UPA think that a government's come back, we get political stability, and the market was limit up the next day. And after that, we had one of the, like a pretty severe downturn as far as the economy was concerned, again, because of global reasons. In the late 1990s too, similar patterns played out. When the Vajpayee government lost its vote of confidence by 1 vote, the market was again sort of limit down, and then it began its upturn. So my entire point is that it's fascinating to watch politics, but the economy is such, and the natural momentum is such that regardless of what happens in politics, a basic sort of trajectory for the economy will continue. So
you're saying that we'll course along on a 7% plus kind of growth rate, whether it's the NDA or another form of government in office at the center. But every time we talk about 8% plus kind of growth rates, there is this talk about structural reforms. India needs to do structural reforms. You talked about the banking sector, for instance. These require a political majority. These require political will. It requires a significant amount of political capital. So then can politics really be irrelevant to the economic story?
No, I think that we are sort of, underestimating what the Indian polity is all about. And here again, there was a very interesting survey carried out. This was a world values survey carried out at the beginning of this decade, where people from different countries were asked, what is your sort of attitude towards the private sector? And India ranked amongst the lowest, which is that most Indians had a very skeptical view of the private sector in terms of that survey, compared to other countries. So I think that there is no constituency for carrying out the kind of reforms that, like all the sort of economists and the Washington consensus wants the country to do, right? So I think that there was an opportunity possibly in 2015.
It's gone.
In terms of when you had a government with a great majority, and it took only a sort of barb about a soot boot ki sarkar and stuff like that for them to quickly shift course on that. So I think that Feb 2015, when the government really presented its first full budget, that was the one opportunity this government had of trying to do something absolutely dramatic. And I know some proposals like that were on the table then, about cutting the sort of tax rates down to ASEAN levels, the corporate tax rate in a very dramatic way to make in India a fillip, about possibly even thinking about annulling the Bank Nationalization Act. These proposals were very much on the table. But I think at the last minute, the political will to do anything about it
was limited because, cold feet.
Yeah, partly because I don't think that they felt there's a constituency for this. And it was also partly because, and this is, I think, I've had this script for a long time, at the same time we changed our GDP methodology. So all of a sudden, we started to grow at 7% during the worst of times. And so then the sort of feeling sank in there, if we can do 7% at the worst of times,
why bother?
Then why bother doing so much more? And so therefore, I think that played a real big role out there. So if at all there was a chance for something dramatic to happen, it could have happened, according to me, in 2015. And also because you had a prime minister who has such great oratory skills that he could have tried to market this to a pretty skeptical Indian public. You have to give it to them that the Indian public is quite skeptical of the private sector, and there's still a sort of great faith in wanting government jobs and stuff. Things have changed, but that skepticism is still there. But you had the chance to try and do something very dramatic about it. So that was the only time when I was sort of waiting with bated breath. Otherwise, my sort of approach is that tune out of the politics. It's a total waste of time from an investing standpoint, from knowing where the economy is going to go, and that the country will continue, because of its very low per capita income, a very low base, and there's so much penetration opportunity across sectors, that the country will keep growing at its sort of natural buoyancy rate.
So forget about what happens in Phulpur or Gorakhpur, forget about what happens in Karnataka, what may happen in Rajasthan, Madhya Pradesh, and of course what is likely to happen in 2019. You believe that in that sense, the Indian economy is more or less decoupled from its politics, and we will continue to traverse this 7% kind of growth rate.
Yeah, I don't know about I'm not going to stick myself to 7% because I think if the global economy has a downturn, there's no way that you get to 7%.
Sure.
And I think that there's a lot which can be done, but I think that that's just the reality of India, which is that we all have a long laundry list of what needs to be done. Some of it gets done, but it's more in the form of sort of incremental changes. When a new government comes to power, they all carry out some incremental changes, and by the time the government ends its term, it gets pretty much into sort of, quite complacent and much more about winning the election through populist schemes. That's just the pattern as far as India is concerned. But I think that there's a bigger debate to be had here at some point in time, which is that why in this country is there such sort of skepticism also about the politics? One of the recent researches that we have done basically shows us this, that 2 out of 3 elections in India are lost. This is the mirror image of, let's say, the United States.
Okay.
So the United States, we did a similar exercise looking at the presidential elections and looking at the state governor elections. And there are more than 500 such instances since 1977, in the US as well, and India. And what we found here was that in the US, the opposite happens, which is the incumbent ends up winning the election. And in India,
so
the opposite
happens. There's no anti-incumbency there.
Exactly. I mean, there's no this, it's very interesting. This term anti-incumbency has been coined in India. So, I'm serious about it. When I try and use the word anti-incumbency in any of my columns, which I write internationally, the editors, whether it's the New York Times or the Wall Street Journal, have come back to me and said, what is this term? And I've had to I think it's a very natural term. But in fact, whoever deserves credit for it, anti-incumbent is the word which has been exclusively coined in India.
And it's an Indian phenomenon.
It's an Indian phenomenon. Because even if you look at the other parliamentary democracies, such as the UK, in the last 2 elections in the UK, 80% of the sitting members of parliament got re-elected. 80%. So I think that this is a very...
So what makes it, why is this the case here in India then?
Exactly, and I think that this is where there's not been enough thought given to it. In terms of that, why is it that in India, the default option is throw the bums out, right? So like in India, we keep thinking that what will the politicians do? What will the government do? And what is the Congress party doing, etc. It almost doesn't matter. The default option for any party is to lose. Of course, there are 1/3 which win, but it's very interesting that we try to figure out, is there any common factor as to why these 1/3 of these people who win elections, why do they win elections? And is there a common factor as to why these 2/3 of people who lose elections, why they lose elections? I think it's easier to come up with why the 2/3 lose elections based on my travels. And I think the single biggest reason why those 2/3 of politicians in India lose power is because the state is broken. And I really believe this, which is that the average person sort of interfaces with, let's say, the local police person, the local tehsildar, the municipality person, the local bureaucrat.
Yeah.
And his or her interface with that is extremely harsh. It's a very tough experience. So even if the chief minister or the prime minister may be well-intentioned, for the daily person dealing with this grind, it is a very, very tough experience. And you can see it in terms of it's oppressive, it is corrupt, and also it is understaffed in terms of the judiciary and things. So it's a very hard experience. And so the average person basically every 5 years just wants change because he or she perceives that not much has changed
for me.
Not much has changed for them on the ground. And of course, there are some other peculiarities which make the default option in this country to just throw the bums out. One of them is that it takes very small vote shares, as you know. 4-5% vote swings, and you get massive swings as far as seats are concerned. The other sort of reason, I think, is also because of the fact that the political funding in this country is all done privately. And so winning in elections has almost become like a business, which is that you need to spend money to win it, and then when you win it, you want to try and recover the money.
Yes.
And it's very tempting not to keep a part of it, right, in terms of as far as the math is concerned. So the allegations of corruption are very easy to stick as far as people are concerned. But I think that this, for me, is a very fascinating point, that why is there not more, that why are politicians not thinking more about why do they keep losing elections? It's such a tough country to win elections, and whether it's US or UK, the other mature democracies, the default option is that the politician gets re-elected.
So the BJP should be worried, the NDA should be worried at this point in time?
I don't think it's
just going by data.
Yeah.
I'm not asking you to make a prediction.
No, as I said that, it's very hard to predict, it's so early in the game. But my point is the fact that that's the default option. That is just the history of Indian elections. Now the question is that there are some states which have been able to beat this trend. Gujarat was one of them, Odisha, Madhya Pradesh, Delhi before that. They were able to beat this trend of anti-incumbency. Question is, was there a common explanation? But for every explanation, I have an opposing case. There's Chandrababu Naidu, who was the hero of the reform movement in the early 2000s. Yeah. He lost in 2004. I still remember traveling to Rajasthan in 2003. And, of the 25-odd election trips that I have done, that was the one election trip where I can say that the group read it wrong. Usually when we go out on the road and we talk to people, we are able to sort of get the feel right. And part of it was because just before we had gone, Ashok Gehlot, who was the chief minister, He had just been awarded as being the best chief minister of the country. The growth rates had picked up dramatically in Rajasthan. It was very visible in terms of what was going on. So we went with the preconceived notion almost that he's going to win. And even though we got some discordant noises, we ignored it on the ground. And he lost. And he lost, like, pretty badly that election. And I think that, that just showed you that even if you carry out, like a lot of economic reforms and you do something, the default in many states is still to lose. So there are many states in this country, Rajasthan, Karnataka, where every 5 years, no matter what happens, you just change the government. Same thing was happening in Tamil Nadu until she beat the trend in 2016. And she beat it for all the wrong reasons. All the business people, when we went there, told us about how poor the state was being run on the ground.
Yeah.
There was rampant alcoholism. But yet, because the opposition was sort of fragmented, and she was able to do a lot of populism, including alcoholism, which she sort of abetted, they were able to win that election. Right? So, and the same thing happened in Punjab. Since 1968 or something, Punjab had never re-elected a government, and it went the other way once and broke a trend. So I think that, so this is the broader point, that the average experience of the average Indian is so harsh with the government, with what it perceives to be the government, that their default option every 5 years is just to change.
All right, let's move on from politics then, Ruchir, and talk about what's happening in the rest of the world. Global growth is looking strong today, and India, in fact, hasn't really converged with what we're seeing in the global economy. Do you believe that that's likely to continue? Do you believe that the US stock markets, for instance, are likely to continue to rally, or do you believe we're at a peak?
No, I think that, one very important reason as to why markets across the world have done so well over the last decade was because you had zero interest rates, you had easy money. I think that's been a very powerful explanation for why markets have done really well. I think that era is coming to an end. The question is how quickly. But it's a question of not if, but when. And I think that has major implications because, as Warren Buffett would always say, it's only when the tide runs out do we know who's swimming naked.
Yeah.
And I suspect there are a lot of people out there without clothes that we'll find out in 12 to 18 months' time. So I think this flood of liquidity is currently ebbing. And I think that that is what is going to pose problems for markets over the next 12 to 18 months globally. And also global growth isn't what it used to be. And one of the most important reasons for that, which I've been speaking about, has to do with demographics. And this is where India had the opportunity but hasn't capitalized on it. What do I mean by that? There are two drivers of economic growth. One of them is the increase in productivity. And second is the increase in the number of people coming to work, the labor force. Across the world, we have gone from a situation of worrying about the population bomb to now worrying about the sort of population de-bomb, right? Which is the fact that we are beginning to see a big fall in the world's population growth rates and in the working age population growth rates. Today, there are nearly 40 countries in the world where their working age population is shrinking. This is like just absolutely unprecedented over the last century or so. In the mid-1980s, there were only 2 countries in the world where the working age population was shrinking. Basically, I think it was Afghanistan and Hungary. Who cares, right? So that's what was going on. But now we are seeing 40 countries in the world where the working age population is shrinking, or close to that, including China, including Japan, including Italy, including Germany. So that is a major headwind to economic growth because you just don't have enough people there. So that's one of the ironies that we sort of speak about, that we speak here about an employment crisis or whatever is going on. Across the developed world today, unemployment is at a 40-year low. 40-year low. And even globally, when we look at it, since we have data over the last couple of decades, this is the lowest unemployment rate that the world has seen. So everywhere, in fact, there are jobs, jobs, jobs because of the demographic shift that we have seen across the world. And the irony is that we keep speaking about lack of jobs. So to me, that is a very stark, more than even the growth disconnect. I think the growth disconnect, we can make up for it after these shocks sort of passed, hopefully, although we'll never get to full potential. But to me, this is a much deeper problem, which is that when the world economy today and the developed world has the lowest unemployment rate in 40 years, why do we even have any concern about job creation out here?
What do you believe is going to be the remedy to that? And the government is putting out its own set of data to show that the unemployment situation isn't as bad as it's made out to be by the opposition. But we do know that there is a problem, not just on the jobs front, there's a problem on the skills front as well. How bad is it likely to get from here on, given the demographic dividend that we haven't been able to capitalize on?
So if you look at the success stories across the world, like earlier this morning you heard a bit of it in terms of the Koreas, Taiwans, Japan, China. They all had this, their key to success was all the same thing, which is they all exported their way to prosperity.
Yeah.
Right? So which is that, and they exported their way to prosperity by producing low-end manufacturing goods in terms of what they did, because it's low-end manufacturing goods where you end up getting a huge amount of employment growth as well.
But that bus we've missed. I mean,
exactly. No,
manufacturing share to GDP for the last 5 years has remained consistently at 16%. We haven't moved higher at all.
I think that the global environment has gotten more difficult, but to say we have missed the bus may not be quite accurate.
Okay.
Because of this reason, that in our neighborhood, look at Bangladesh, look at Vietnam, look at Cambodia. All these places are picking up the low-end manufacturing share from where China is vacating it.
Yeah, but
so,
we haven't been able to capture that.
Exactly. So we haven't been able to do that. And yes, it gets more difficult because we are now in an era of deglobalization, which is the fact that it is becoming much more difficult to export your way to prosperity. For the great period from the 1980s right up until the global financial crisis, global trade increased at 2 to 3 times the pace of global GDP. Now global trade as a share of GDP is in fact falling. So this is a major headwind that we run into. But yes, the focus has to be on low-end manufacturing. It sounds a bit unsexy, you know, because we all want to talk about technological prowess and do very high-end manufacturing and stuff. That's just not the formula. Even China is only now migrating towards high-end manufacturing.
But are we competitive enough to be able to capture that share of low-end manufacturing?
No, I mean, the evidence has been no, but a lot of that has to do with the fact that the infrastructure that we provide, the labor laws that we have in the country. I think that those are the factors which have really disappointed it. But we did see, I mean, last decade, the main reason the economy grew at 8-9% was because export growth every year was 30%. 30% export growth.
We're down to 10%.
Exactly. So when you get 30% export growth, that's the way to do it. And I'm saying that now we basically have regressed, where it's getting very difficult for us to even clock double-digit export growth. So I think that that is the big shift which has happened.
So, you know, speaking of this big shift, and you rightly pointed out that the export engine isn't firing for us. In fact, after several years of decline, we're now starting to see an uptick, and we're clocking at about 10% today. Without that, how realistic is this 8% growth number?
See, I don't want to get wedded to a number, because I think...
No, I'm not,
No, but I think, yeah. So I think that in this, firstly, in the global economy today, nobody is growing at above 8%, right? So in terms of, like even among the smaller nations, I think that at the peak in 2007, when you're at the peak of the boom, there were like, I think, 40, 50 countries which were growing at above 7-8%. Today, there are maybe 4 or 5 countries. So
we will continue to be the fastest growing economy.
Yeah, but fastest growing, yeah. So, I mean, that's a great marketing tag, because, but the entire issue with that is that's partly because our base is much lower.
Yeah.
Like, China's base is 4 times higher than ours in terms of per capita income, in terms of economic size, and it's much easier to grow from a lower base compared to a higher base. So, yeah, that's fine. So, India has enough natural resilience, and there's enough sort of policy tinkering which is done to make sure that we'll keep growing at a steady pace. What the real number is, I don't know, whether it's 6 or 7%, but somewhere in that corridor. But to aspire for 8-10% economic growth has not only become more difficult because the global environment is much more challenging, but also the fact that, as I said, that if we couldn't carry out the kind of breakthrough reforms for which we had the window in 2015, the odds that any of that is going to happen in the foreseeable future is very low. So I think that it's unlikely that's going to happen in terms of for us to get to 8-10%, unless the global economy all of a sudden sort of completely confounds me and goes back to growing like it did last decade, and our exports then can somehow pick off on the back of that.
You know, one of the other challenges or constraints that we are going to have to deal with as an economy, and perhaps one of the most important ones, is income inequality. And this is one of the parameters that you look at when you judge whether a nation is rising or falling. On that parameter specifically, how concerned would you be today?
No, I think income inequality is a global concern. Question is that when does it become such a big concern that it begins to sort of cramp your space for carrying out reform, that it leads to an anti-rich kind of movement. In that regard, I think India has made some progress over the last few years. So there are 2 or 3 ways that we look at in terms of, we look at the list of billionaires, because that's a very real-time way of looking at it, and seeing that how many billionaires in the world are so-called bad billionaires versus good billionaires. It's a broad categorization that sort of billionaires coming from sectors where the government's involved, or you need government help to do that, typically we classify as bad. Not all are bad, but that's the rough thing. And good is when they come in sectors such as manufacturing, technology, which is basically sort of
less state intervention.
Exactly, less state reliance to grow. India had become very skewed at the beginning of this decade in terms of the good to bad billionaire kind of ratio. And believe it or not, over the last 4 to 5 years, that ratio has changed favorably. That the number of good billionaires in India, coming from sectors such as manufacturing, technology, etc., has gone up considerably. Now, this has been helped by the fact that the global commodity cycle has collapsed, and a lot of bad billionaires do come from that segment. But at least we have seen a massive pickup on it. But I think that the thing which still jars for me a bit is the number of inherited billionaires in this country. So the number of inherited billionaires in terms of people who have technically inherited their wealth is about 60%, 60 in terms of the total number. That is, again, about twice as high as the emerging market average or global average. And I think there are only a couple of countries in the world where the number is even higher. Possibly, I think, Indonesia and South Africa, if I can remember the top of my head.
Okay.
So I think that what we want to see is, and I think that this is why the culture of dynasty pervades across our society. It's not just something
politics.
It's not just politics. It's got to do with business as well. When you have 60% of your billionaires basically have inherited their wealth, and that's twice as high as the average number for other developing countries, that just tells you that this is a societal issue. It's not an issue about just politics or business.
Or a particular family. Okay, I'm going to throw this open to the audience for questions. If you have a question, please raise your hand. We'll get a microphone across to you. I'll come to you, Prateek, in just a second before we get the mics there. So, Ruchir, let me then ask you, you talked about some of the missed opportunities. In terms of your to-do list, what is the #1 priority that you would put down?
No, as I said, obviously thinking, like as I said, there's a theoretical stuff and there's a realistic stuff.
Realistically.
Okay, let me tell you that theoretically, as I said, the banking system privatization would have been top of my list.
But it's not unlikely to happen. Right. I won't say it's not going to happen.
I think that the best hope India has is to keep ushering in an era of competitive federalism, which is that the action has to be more and more decentralized and the states have to do more and more. And as I said, that whether it's the BJP government or that could even be one of the upsides of a coalition government, is that you have to give more and more power to the states, whether it's labor laws, whether it's other things to sort of set up SEZs or manufacturing. The states have to get more and more power. And in that regard, I don't like it when the center imposes cesses which only go to the center, don't go to the states. So I think that if you ask me most realistically what can be done, given the way the Indian polity is moving, is basically much more competitive federalism, where you get much more competition between states to attract investment and to improve things.
We're seeing competitive federalism. We're also seeing much more cooperation now on account of the advent of the GST. I mean, you've got the GST Council, which is virtually deciding indirect taxes now for everybody.
Yeah, I think that's a great...
So the states have had to give up that autonomy altogether. So
not give up the autonomy, but to participate in it.
Sure, but that's a good thing.
Yes, I think that's a good thing. But I think that, as I said, that much more power to be given to the states in terms of what to do with their stuff. So that is, I think, that the more competitive federalism you have, and the center just sticks to the basics, I think that is the best hope for India, if you ask me, given the way the polity is moving over the next few years. So that's the realistic hope. The theoretical stuff, is there any constituency in this at all here which is going to say that let's privatize these banks? No. So we'll keep seeing privatization by malign neglect.
But Air India is like, well, they still might retain about 26% or 24%. We don't know. That decision hasn't been taken. But, are you surprised with that one?
No, I mean to say that, you can get one marquee privatization. I'm talking about the culture. As I said, the banking system is at the heart of it. That is where no economy is able to grow rapidly without a vibrant banking system. And as I said, the share that India has there of the government is about the highest in the world. Maybe after North Korea or something, I don't know. But so I think that's the problem. Yeah.
Okay, Pratik, if you can stand up, we'll get a microphone across to you. Pratik Jain, indirect tax head of PwC, go ahead.
Yeah, so Ruchir, you spoke about de-globalization, and my question relates to that. If you see in last 2-3 months, what US has done is increasing tariff on aluminum and steel, etc. They've taken India to WTO now against SEZ and other concession that India offers. India has increased custom duty significantly in February. We all know China has been doing it for some time. So do you think this local is becoming a new global in many ways, and it's leading to some kind of a trade war between developed and developing countries? As a global investor, does that concern you?
Of course it does.
How real is the threat of a trade war, global trade war today?
I think that, so if you look at history, in the 1920s, you had a booming economy, and you began to see trade skirmishes. The trade war can become reality once you have a global downturn, because then the scapegoating really begins. That's when you have the Smoot-Hawley tariffs of the 1930, which was seen to cause the Great Depression. That's what caused it. But I have to say, India has to be very careful out here, because I just saw this research yesterday, which was very telling, that the US has identified 5 countries in the world where the tariff rates that those countries impose on their exports is much higher than the tariff rates that are imposed on those countries' imports into the US. Yeah. 5 countries in the world. They are China, Thailand, India, Argentina, and Brazil. Of these 5, 3, China, Thailand, and India, run trade surpluses with the US. Yeah. So I think that means that India really is a bit of a target out here. But, China is so much bigger, the problem so much bigger with China, that you will see a lot of action between those 2 countries, and hopefully India can sort of slip by the side. But I think that this is the big risk, that the US sees this in very simplistic terms. Yeah. What are the tariffs that you're imposing on our sort of imports into your country, and what are the tariffs that we are charging you for your imports into our country? And so India is among those 5 where the tariffs are much higher here. And we have a trade surplus. So I think that this is going to be a sensitive issue. But in terms of an all-out trade war, I think the real risk of that will come if we get a global downturn. Then I think that many countries are going to be, oh boy, we need to sort of protect our domestic people. Hell with all this sort of globalization and WTO and stuff like that. So that's the big risk.
Well, the silver lining is that the US has moved the WTO as opposed to taking unilateral tariff action, which is what it's done on steel and aluminum. Yes, sir, go ahead with your question,
I'm P.K. Gupta. I just, you are saying that anti-incumbency, the last 70 years after the independence, probably if you look at 30 years, was not the time of anti-incumbency.
Yes.
Somehow, what is your views that the politician, what they promises, if they are not able to deliver in the last 30 or 40 years, obviously in a clear democracy, the public gives the reply to them. So, which you are saying that probably last 30 years, 40 years, each government comes, and the next time the new government comes,
Yes.
So obviously the politician, what they are promising is not able to deliver.
Yes. But I think that, let's distinguish, which is that India was not a true multi-party democracy really until the 1970s, maybe until the 1980s. So it's like in South Africa today, the African National Congress is the only party which is there realistically. So I think that to look at any of this electoral data before 1970s is irrelevant, because India was still a sort of budding democracy. So it was not a true multi-party system. But I think it's very important. It's very easy for us to say that politicians cannot deliver. I think the next level is, why can they not deliver? At the end of the day, I believe every politician's dream is to die in office. Nobody wants to sort of, be outside office, right? So they want to be in office. Just having seen these politicians when we've been on the campaign trail, I firmly believe that every politician is not out there to like, loot you or is corrupt to the core, etc. They truly want to win elections. Some of them truly want to do things as well. But I just feel that it is like very difficult in this country, given the state machinery, to try and deliver on that promise. It is very, very difficult. Like I remember that this was 2004, we had gone to Amethi, to the Gandhi family's constituency. I still remember asking them there, the Gandhi family was there, asking them there that, why is a constituency looks like this? It doesn't look like a VIP constituency when you go out there. And the answer they gave me, I thought was interesting, whether you believe it or not. Their answer basically was that you'll be surprised how much the state government tries to undermine any development that we try and do in this constituency. Whether you believe it or not, I don't know. But at least it was, to me, fascinating that here, at that point in time, is the most powerful family. Their constituency looks basically like a pretty backward constituency. And yet, their explanation for that is how difficult it is for them to try and fix the problems in the constituency when the state government is trying their best to make sure that no funds reach this place. So I think that it's the state which is so broken out here, which is what I think is the core of the problem. So the politicians, many of them do try, but it is not there. I think, and some of them are so scared. Like a consistent observation we often get when we travel this constituency is, after winning the election, the MP or the MLA is nowhere to be seen. He doesn't come back. Part of it is because I think he realizes how daunting the task is, because everyone expects them to offer individual solutions that come and offer, like you basically come and fix this, come and fix this. You go to any politician's home, there are 1,000, 2,000 people waiting outside their homes looking for some form of help. It's just impossible for that to deliver because the state machine doesn't work.
Vikas Khemani of Edelweiss. Vikas, go ahead.
Ruchir, thanks for such a great session. We are in an environment where global rates are going up. Global growth is no doubt strong, but I think interest rates are going to go up. Debt market is practically now, the bull run is over. So how do you see, when most of the emerging markets are leveraged, do you see a lot of headwinds for the global markets, especially developed markets, and what it would mean in terms of its implication on the emerging market? China crisis is almost waiting to happen. Paul was speaking about that. That could happen anytime. And also, what's your view overall in the equity market per se, globally for developed market and its implication on the emerging markets?
No, as I said, that over the next 12 to 18 months, I'm very concerned about global equity markets because this end of easy money environment is bound to have negative implications for global equity markets. The good thing about emerging markets is this, that many of these countries have underperformed so much compared to the US because they were going through their adjustment process between 2011 and 2016, that they are very much at the early stages of the economic cycle. The US is at the late stages of the economic cycle. If the US expansion continues till next year, this will be the longest US expansion in history. Emerging markets are just, many of them outside of China, have just begun the recovery process. Even the Indian market, if you look at it in dollar terms today, is barely above its high of 2007. The US stock market is up 70, 80% since then. So, and most emerging markets, on average, are down about 10 to 20% compared to their 2007 highs. So I feel over the next 5 to 7 years, just because the cycles have played out differently, that emerging markets are in a better position compared to the US, not because of anything else, because the US is at a much more mature stage of the cycle, and China and others have some problems, and many of the emerging markets today are in a better position. We keep referring to this term called Fragile Five. That term doesn't exist anymore today. Why? Because all these countries today, whether it's Brazil, Russia, South Africa, India, their current account deficits have all shrunk. They're not running the kind of very high current account deficits that they once did. So their reliance on external capital today is much less. So in short, I feel better about emerging markets compared to the US, given where we are at the stage of the economic cycle. Next 12 to 18 months, though, globally, I do feel that I'm concerned about markets because this end of this easy money era is bound to have implications for financial assets.
Lata.
Ruchir, the only time we had a paradigm shift in policies was not when we had a stable government, but when we had a minority government and an external economic crisis, 1991. Now, so do you think that we shouldn't have expected revolutionary changes with very stable governments. Now we have a looming large banking problem, possibly a less stable government, a good combo for privatization of banks.
No, I mean, you see, the main reason we had the reforms in 91, as you know, is because we had our back to the wall. Most emerging markets, and this is not true of India, this is true of everybody, most emerging markets carry out economic reforms only when they have their back to the wall. So I don't think it had to do so much with what the politics was. It was because India had its back to the wall at a time when the Soviet Union was collapsing and making the case for capitalism was about the easiest. This was before the East Asian crisis even. So those were the heydays of unfettered Washington consensus, capitalism, and at the same time, India had a major economic crisis. People forget that even in the early 1980s, that's the first time really India began to carry out economic reforms because we had to go to the IMF again to take a loan out there. So every time there is a major economic crisis is the best time to carry out economic reforms. Unfortunately, no, that's the problem. That what we're seeing now is basically death by 1,000 cuts. Yeah. This is not like a crisis. This is not like a US-type crisis where basically something needs to be done now because the whole economic system has come to a halt. This is basically privatization by malign neglect. Slowly, the public sector just getting eaten up. So to me, I think it's a very important point. Had we got a crisis, the chances of reform would have been much higher rather than this sort of slow bleed which is taking place just now.
Yes, sir, go ahead. You've got a question.
Ruchir, I'm Pawan Malhotra. You have been a sprinter and a relay runner. So I just wanted to know, apart from the excluders of millionaires from India, what other advice you want to give to Narendra Modi and also to Donald Trump?
Are you dishing out advice this afternoon, Ruchir?
But one thing which I've figured out in all my humility is that giving advice is the biggest waste of time because no one listens to you. So
you have become very pessimistic about Indian politicians. That's what I'm saying.
No, I said the opposite. I'm sorry. I basically said the fact that I think Indian politicians do try, but the state is broken. And that's why they don't get the delivery. So I think as far as advice is concerned, in terms of the fact is that I personally feel that my job is to observe rather than prescribe. That's how I really see my job. And then to come and hopefully share whatever I glean from these visits. But the idea of advising people has gone. Shireen, like you remember this, I'll just take a minute here to tell you about my last time I gave an advice to a politician, how badly it ended up. I was invited in Moscow in 2010 to basically speak there at the convention on Russia rising. Something similar basically happened there, right? So because Russia was doing really well, so like a summit was organized. The summit organizers called me and said, Putin is coming for this speech. He would like a large investor like you to give advice on what Russia should do. So I took that advice seriously. I said, okay, fine. If he wants the advice and Putin is speaking, he's going to be there, I will do. So I prepared a presentation. I was told, make a frank presentation of what you want to say. So I took the words literally frank. So I got up on stage and Putin was sitting where Shireen's sitting, and I got up there and basically started making my presentation, telling that, when you first came to power, you were a real reformer. This is what you have done to reform. When he first came to power, he was actually like a reformer. He cut taxes, he introduced a flat tax. He sort of, basically had to deal with the oligarchs, said, you do your private sector stuff, just keep out of politics. And he did a lot to try and make sure that Russia paid down its debts. A decade later, with the oil boom, the attitude had totally changed. So I told him all this in terms of how Russia hadn't diversified, too many billionaires, crony capitalism, blah, blah, blah. He sat there taking notes. So I thought, well and good. He's like basically listening to this. Then he basically goes on stage after me, and he gives his talk, and he seems to sort of acknowledge some of the points that I've made. I go home or to my hotel thinking well and good. Next morning, early in the morning, I'm woken up by my office back in New York with someone from senior management calling me and telling me, what have you done? So I basically said, what have I done? They said, don't you read the newspapers? I said, no, I don't read Russian. What is the issue? And they basically told me that the Russian press, which as you know, is totally controlled by the Kremlin, had gone after me. basically saying that he's come here and spoiled this party. Who needs his money? He can go home. I was advised to leave the country. I haven't gone back since. And I'm not giving any advice anymore.
No, I'm sorry, sir. We're unfortunately out of time. I'll give you the final question. Go ahead.
Hi. So it's slightly offish, but what's your take on the cryptos market? That's one. And second is the cryptocurrency market. And what is the path you see for the cryptos to be formalized within the banking system? I mean, in terms of the duration, also in terms of how much of governmental changes or procedures would have to be made.
All right.
No, I don't think. I think that the crypto boom that we saw over the last year or so was, in a way, for me, one of the last vestiges of the liquidity boom. That basically, because there's massive boom in global liquidity which happened, and when people began running out of options, I think they went to cryptocurrencies. But if my observation is correct, that this end of easy money is coming, I don't think that this crypto boom can last. And I think it's already showing signs of cracking. So I'm not that optimistic on this phenomenon. I think it's a speculative play, which was a late cycle play at a time when the cycle was coming to an end with too much liquidity. So I feel that, yes, it'll be formalized in some way, but this is not something that I would advise anyone to be playing just now, because I think this was the late stages of a liquidity boom.
Well, Ruchir, we're pretty much out of our time. Just to pick up on the Russia story, if you were asked to make a frank presentation about what India should do, what would be the top 3 items on that list?
I just told you that
outside of privatizing banks,
sorry.
because you said that that's not realistic, not a realistic expectation.
I love India. I want to keep coming back. So I'm not doing anything. Thank you.
Ruchir Sharma, it's been an absolute pleasure. Thank you very much for a fascinating conversation about the economy and politics. Thanks very much for your time. Thank you very much, ladies and gentlemen.